Thinking about use cases in the corporate environment for faster payments or real-time payments, they're very specific to the need. Often consumer focused at the other end of the transaction, and often focused on service or convenience sort of expectations. So the concept of an insurance company being able to make a claim payment to a policyholder in the midst of a crisis, and being able to get that money in their primary account in real time, great value. Actually, talking to insurance companies, anytime they can pay a customer really quickly, they find that to be sort of very well received by their customers. There's been lots of talk in the payroll space about the needs to do sort of real-time payroll, not for everyone, but particularly for departing employees and things like that. And various states have requirements that make sort of the closing out of a business relationship and employment relationship tough, that faster payments capabilities sort of would assist. I don't see, though, the same sort of attachment or desire to get involved with faster payments in the commercial space sort of broadly, whereas consumers can't get anything fast enough. The corporate environment from a payments perspective is, for many organizations, very well established. And well established is another way to say really hard to change. And so I think the biggest impediment is just inertia. It's just the concept of change. And especially if you look at specific use cases, trying to generate enough value return for the investment to modify systems and make changes can be difficult. Also, companies, the treasury environment, the payments area of any company is not likely to get the first investment dollar from their company. They're an overhead function. And so when the company is doling out its investment dollars, they're probably going to be very low on the list. So I think really just inertia and the fact that many of the solutions don't deal with all of the payments that they need to make, those will be the things that we'll have to work on to try and help them overcome and to move that way. It's very interesting that as we talk to practitioners and we get their perspectives on sort of what they expect going forward, the visibility of fraud continues every year. It seems like the numbers get higher in terms of an expectation that it's going to get worse in the future, and you would think that would translate into corporate practitioners then being as diligent as they possibly could to protect their own environments, as well as holding their banks accountable to a very high standard. Generally, what we see when those practitioners respond is that they do expect their banks to have a very high standard for protecting, but they haven't sort of taken the steps that they can take, just very practical things, like isolating payment-related technology from the internet or from email, having dual control, out-of-band authentication or approval of changes to payables records and things like that. So from that perspective, I think that they're right. It will probably continue to go as long as there's money to be made by the criminals. They'll be at it. I think in terms of, will it have an adverse effect on faster payments, more specifically? Probably not so much more than it would on any payment channel. TD was a part of the Fed's Faster Payments Task Force, and I would say that the 2020 objective was somewhat aspirational in nature. I think there's an awful lot that goes on today from a payments perspective where you could say, actually, you could make a real-time payment for most people, whether it's using cards, some like Zelle that you mentioned, which a number of banks participate in, or Venmo, or lots of different alternatives from that perspective. Heck, you can just do a wire transfer, and so you can get an electronic payment real time from point to point between any two bank accounts. But in terms of what the ideal is, in terms of building out these capabilities, I think 2020 is a bit aspirational, but I think we'll see huge uptake in the next couple of years. Having said that, I'm not really confident that true ubiquity, if anybody can agree on what that means, is achievable until solutions have a means to exchange transactions with one another, for solutions to interoperate. And so there is work going on to try and identify a framework, a private sector framework, that will allow solutions to come together, banks, practitioners, corporates, et cetera, to talk about how to create an environment where transactions can be exchanged from one network to another. If we do that, then it doesn't require any one solution to win the hearts and minds of everybody in the country. And I think that's how we'll get to real ubiquity. One of the other things that we talk about is, historically we've talked about ubiquity. We talk about the ACH network all the time as being ubiquitous, because you can get from any account to any account in the United States. But the fact is there's still a fair number of people in the US that don't have bank accounts. And so no solution is really ubiquitous until we find a solution for those unbanked. And that's certainly been a part of the Faster Payment Task Force work, is to consider that. But in a sort of crawl, walk, run methodology, we start with what we have, but with a recognition that we have a real need to also include those folks who aren't banked in the US and allow for them to participate in the faster payments environment.